The December numbers are out. We know how the year end, and yep, more and more records were smashed. And second, there are rumblings of a new real estate tax coming. Hello, everybody, and welcome to this episode of the Vancouver Life Real Estate Podcast and YouTube channel. Myself, Dan, and Ryan, my colleague here from eXp Realty, are here to talk about what happened in December. But first, because it's a hot topic, just hit the presses yesterday, CMHC has funded a new study with the outlook being a couple of options of how they feel the housing market could be slowed and become more affordable. Ryan is going to take over here, break down a bit of what they mentioned, and then we're going to kind of give our input into what we think about their recommendations.
Yeah, interesting. I guess interesting study. So CMHC funded a study conducted by a Generation Squeeze. That group is basically an academic group, including the University of UBC. Actually, I'm not sure if it's UBC, but I think it is. Anyhow, Paul Kershaw, who's a university professor and heads up the group, he obviously said that there's going to be a need for more action to reduce prices on homes. So they came up with several solutions. Much like we've ramped up the taxes on low carbon, they want to do something similar with homes. So before we go any further, let's just understand that this is a new tax. It's not going to help supply, right? This is what Kershaw said. So Kershaw said the price on housing equity would target a value above $1 million in the hopes that it could slow the market. What does that mean? Well, if you look, the primary purpose, right, on the price of housing equity is to try and slow down home prices to capture the idea to restore affordability for everybody, right? So we need home prices to stall so earnings or your wages have a chance of catching up. You know, as a listener on our show, we've talked about wages for a long time, and wages have increased by roughly 0.3% a year over the last 40 years, a very, very, very low average, right? So what they're proposing is that they would put a surtax, and it would be a sliding scale between 0.2% and a full 1% added to homes valued at more than $1 million. And what does that mean? So if you had a property of 1.2 million, it would get dinged about $400 a year, which you could defer and pay out once you sell, right? So, however, if your home is over 2 million, that goes up pretty substantially to about $20,000 per year that you live in your house that you now owe the government because your house is too expensive and they haven't been able to figure it out. Here's where it gets really kind of interesting. Real estate is taxed more than it's ever been now, right? If you look, we've got school taxes, PTT, GST, empty homes tax, foreign buyers tax, increased property tax, schools tax, stress tests. How many more things do we want to, slap on this before we start realizing this is the definition of insanity? We're doing the same thing over and over and over and over again, expecting a different result. And that gets echoed in the article. CTV actually reached out to the Canadian Taxpayers Federation and the federal director, Franco Terrazzano. He actually said that you build homes with hammers, not with tax hikes. This is coming from the Canadian Taxpayers Federation. He argued that part of the affordability problem is red tape and taxes, which can add thousands of dollars to construction costs of single-family homes. Terrazzano said that where governments should start is by reducing those fees, which would lead to more supply, which would cool the price, which is what we've been saying for years. Many Canadians also rely on the proceeds from the sale of their home to fund their golden years. If you want to change this, this would cause so much pain in the Canadian home ownership culture that I think any politician trying to take this on, which he further says, not the Canadian Taxpayer Federation, but the UBC professor says, well, that's the job of politicians, is to change the culture in the country so that they do accept it. Generation Squeeze finally said, this amount, the amount that he's talking about, the equity tax, 0.2 to 1% on the sale of every home, is estimated to result in the billions of additional dollars, and it could help fund affordable homes. Problem one, we have no idea where that money goes. It goes into general revenue. So we have no idea if it's actually producing affordable homes. Two, the CTF claimed that the amount of tax revenue would cover the spending of Prime Minister Justin Trudeau's government for less than 5 days. So the idea of creating, I think, affordable homes is a noble one, but this is not the solution. This is the same approach, expecting a different result. It's, in my opinion, the definition of insanity. I just don't understand how that's going to happen. I actually agree with the CTF. You need to reduce the amount of taxes that are imposed upon developers and builders so that they can build faster. More supply will alleviate the price issues, but we're just not doing that. And we want a quick fix. This is not a quick fix problem. I get aggravated when I see this because, for people who aren't very educated in the real estate market, it seems like, hey, we need more help to get to change so that I can buy a house. But this isn't going to generate that, right? And we know that because we look at this stuff every day. I don't know, Dan, how do you feel about it?
Yeah, like you touched on, the idea of taxes, of making something more expensive makes it more affordable is just absurd, of course.
Yeah.
Like you said, the tax starts at $1 million, or the proposed tax starts at $1 million. The average home price in Vancouver is $1.2 million. So you're saying to me that if I want to buy an average home in Vancouver, you want to make it about $15,000 more expensive at year one? That doesn't sound like it makes it more affordable to me. And yes, of course, as we've seen, homes are more taxed now than ever, and yet they are more expensive than ever. We know that taxing housing does not make it cheaper. It doesn't slow it down. Not when you've also got the other hand of the government saying, okay, well, here's 23% more money into the system. Let's pump up asset prices. So you've got two opposing sort of views, if you will. One are pushing up the price, and one are saying, well, we'll just take some of that money back that you have increased the homes by. So, and again, all these taxes that are already implemented are largely in place, at least we were told so, that they were there to help create more housing. I haven't seen them.
There's supposed to be 4 million houses coming.
On top of this, they've recommended a couple other options. And one of them, of course, is to make access to credit easier for those looking to build low carbon co-op and affordable housing. So they're trying to allow builders to get more money to build these rental houses. Okay, maybe we'll see if that happens. And then this,
Dan, who benefits from that?
The developers, if they can get cheaper credit, but
if they can, but if it's rental purpose built only and the city owns it, then the city's benefiting from this.
Sure. Yeah. I mean, builders might be incentivized, but again, is that where they're going to see their highest returns?
But what about what about the constituents, the people who need the housing, right? I mean, if people are saving up forever, I mean, the whole idea of co-op housing, it's a great idea, but in terms of the way we lend and in terms of the way mortgages work, I just don't see it making sense. It's added risk for the bank. So why is the bank going to take that on?
Hey, I'm not disagreeing. I think too, there's that, and there's a second one, which is to me even more absurd, in the fact that affordable housing, they're leaning on rentals, right? The government's gone and shown and continually speaks to the fact that many Canadians look to owning a home as basically a part of their retirement plan. And it is for many, many millions of people. Now, saying to get out of housing and we're just going to help build rentals aren't making anybody wealthy.
No.
And then listen to this one, verbatim. One of their great ideas is to allow mortgage holders who feel they are in too deep to sell their property at fair market value to an independent agency, whoever that is, which would then create multiple units and then rent back one of those units to that previous homeowner at a 30% of their income rate.
Thus making them poorer over time.
Just exactly. So they're saying, in order to make housing affordable, we're going to take away your biggest appreciating asset and make you a renter where you are just, putting your money into somebody else's pocket.
Yeah, and I'm sorry. This is like, look, the cost of housing, without a doubt, is expensive. Okay, there needs to be some sort of solution. We know what the solution is. It's more houses for more people. It alleviates the pressure, right? So why do we keep going down this road? It's a broken record for decades.
They just funded the study that in no shape or form talks about
anything
densification, rezoning, building more homes. It's skirting the entire issue once again.
And I do think that everyone's kind of scratching their head. Well, how do you make it more affordable? There's technology coming that will start to do that, right? You got to understand the taxation issue. It's for the last 30 years, we've been throwing taxes at Canadian homes, expecting them to go down, and nothing has happened, right? I kind of want to talk about how NFTs and things like that could create affordable housing. It seems like a nice fit for it, but maybe we'll save that for another episode, because there are definitely different ways to create affordable housing. The introduction of technology that's coming out now that would really help this. But instead, we want to go back down the old path of hurting people for trying to do well. I don't get that.
As a quick breakdown too here, let's see what $5 billion, their estimated annual revenue from this proposed tax, would actually do. We know already that the Canadian government is one of the worst allocators of funds in history. They waste money like crazy. And I think spending money on this study is probably another one of them. Regardless, that's my opinion. $5 billion in cash for 1 year. Okay, let's use $350 a buildable foot as an example. I'm sure they'll overpay should they be given the option, but that would build around 14 million square feet of living for people. Let's use an average home of 1,000 square feet. Okay, you're going to get 14,000 new 1,000 square foot condos, average of 2 people in that. You're looking in and around 28,000 people would be provided new houses per year with this money. Does that solve the issue even there?
Not even close. The other thing that we should talk about, I mean, that would be, maybe a month of inventory across, like this would be BC's 1 month of inventory, but this would be building homes across the nation. So I don't know really how that we'd get a small portion of those homes, or I don't even know.
Well, keep in mind, right? We're sitting at about 80, 90,000 homes actively listed nationally. We need that to go to at least double to still be in a seller's market. So, 2.5 times. We need to get that up to around 250, 260,000 units to kind of hit a balanced market. So throwing another 28,000-ish on top of that, I mean, it barely scratches the issue.
Here's the other thing too, Dan. How do you know that this money is going into that?
Well, you don't.
We have no idea. I'm sorry, but we need to be more in control of our own dollars, not less in control of them. And by taxation, you become less and less and less in control of your own finances. And you get decisions like this. I mean, didn't we figure out that throughout the pandemic, the government spent something like $3 to every one that was needed?
Mm-hmm. Yeah, for every dollar that was lost, they reimbursed $3.
So there you go. We're going to do more of that. That's what's going to happen. It's what's happened in the past. Anyhow, let's get on, because we could go down this road forever. There's no solutions here. I just think that this is
stupid. Yeah, it's who knows if this will get pushed through. Again, you don't see the federal government necessarily pushing this. They're kind of making CMHC the spokespeople here, and we know how credible they are from the last couple of years. So I don't know if they were the right people to push forward. Regardless, let's talk about how the year wrapped up. We did do our year-end stats, but of course that came out January 1st. The numbers official now for BC are out, and of course nationally here. Today's January the 7th. This will be released on the 8th. Couple key numbers to touch on. Home sales hit an all-time high in 2021. We already knew that. It happened in November. It happened at the end of October. So we had 2 more months of sales to happen to get our final total. We being Canada, nationally sold just shy of 44,000 homes, literally 43,999 homes in 2021. That's a 42% increase from 2020. Yeah, there were a couple months of shutdown there, so not too surprised that it's higher than that. But it is a 74% increase in sales from 2019.
Wow.
Previous all-time record was back in 2015, and last year 2021 saw about a 4% increase in sales over that record 2015 year. So here we are, we're at a new all-time high. And of course, it's always good to look at the bigger picture. So look at the 10-year average. We're about 33% higher than the 10-year average for national home sales.
Wow.
That's 2021, almost in a nutshell there.
Yeah. Okay, cool. Well, let's talk about listings here because this is we need more of them. In 2021, home listings reached 62,265. This was a 14.7% increase compared to last year, and a 19.9, I call it 20% increase compared to the 51,000, call it 51,900 homes that were listed in 2019. This puts the listing total 11% above the 10-year average. So as you can see, there's more consumption than there is supply by threefold.
Yeah, exactly. It really speaks to why this inventory is just getting eaten up. Okay, so let's get into what happened locally, GVRD here in December. So we saw about 27 homes sell in the month of December. This was about a 13% decrease from the December of 2020. Bit surprising, but again, inventory related. And then it was down about 22% from the month before. So somewhat typical that December slows from November, though a bit wild to see it that much lower than the previous year's December. But let's look again, 10-year average to get a true picture of where it sits. About 33% higher sales in the month of December here in GVRD.
Yeah, and let's not take in or forget to take into account the onset of Omicron during December. And that likely tapered, plus, Christmas and everything else that people usually start focusing towards, right? So it doesn't really surprise me. I think a lot of how we go forward in 2022 is going to depend on whether or not people want to actually sell their homes. So anyhow, let's talk about new listings in December. So there were 1,945 properties newly listed. That is a 19.3% decrease compared to the same time a year before. However, it's a staggering 51% decrease compared to November 2021. Things kind of fell off the map. I think people also went traveling. They did all kinds of stuff, right? It's kind of typical to see that performance in December. It's a bit sharp if I'm being honest, but I don't know. That's kind of what I think.
Okay. Let's talk inventory because it is getting critical now. And just a quick backstory, Ryan. I remember we were driving together after, I think it was a listing presentation about 4 months ago. And we were looking at the horizon, and we really kind of talked about the fact that what we are experiencing and what it looked like was coming down the pipeline is literally going to hit a critical mass here. Like it is getting to a point where it's beyond extreme. It feels almost dangerous that there are so few homes available right now, and what's happening in the landscape. And of course, we're set up to continue in this environment. So, to give you an example here, you'll probably remember in October, November, we were talking about 10-12% decreases in inventory month over month. Well, things got really gnarly in December, where we saw a 39% decrease in inventory. Sorry, that was from the year before, but a 27% decrease just from November.
Yeah.
27. So we went like 10%, then 12%, then 27% decreased inventory, which, so compared to last year, about 39% lower. We are sitting today at essentially an all-time low. We're 30-year low in inventory, yet of course 30 years of growth, population, etc. It's impossible in this environment to have this low supply and yet this massive demand without seeing prices continuing to rise. And we'll get a little deeper into what we project later, but just keep in mind, supply and demand. Supply is all-time low.
but I've got a way to fix it, Dan.
Tax it.
Yeah, I'm just going to tax it.
Make it more expensive.
Like, anyhow, is it not clear from these statistics that the government should be awarding massive contracts for construction? Like, if they really want to do their part, like, I don't know. Anyhow, we need supply. We need homes. And if there's people out there in the city and there's people out there in federal government and provincial government, and they're hearing this, alleviate the pressure by allowing people to build faster. That's what needs to happen. And stop taking so much tax in the development of things. Anyways, my favorite, let's talk about the sales to active ratio. Holy. The average was 51.3%, up from 44% in November. It's the third all-time high, behind March of 2016 and March 2021. Yeah. I was thinking this March was the biggest. So we hit that number in December. That's just, you just don't hear about that. It's so out of the cycle of typical sales to active ratios and when this normally takes place. So for detached homes, we saw a whopping 35.1%. Remember, your balanced market is 12 to 20%. So we are way out of a balanced market here. Or sorry, that's a buyer's market. I'm confused. No, I'm right.
12 to 20 is balanced. Yeah.
That's right. Yeah.
Yeah. Below 12
Below
is the buyers.
Yeah. We just haven't been in it for so long that I can't remember.
Sorry.
Yeah. Look, and I got to say this right now, because I've seen it in some of the comments and stuff. When we laugh at this stuff, we're laughing in disbelief. Like it's so unfair. And the measures being taken to solve the issues are nonsensical, that it just repeats itself. And I just laugh at the idiocy of it all, because it is avoidable. There's a way to get around it. 75.6% sales to active ratio for townhomes. For every 100 townhomes available, 75% of them are selling. That's incredible. That's very, very, very high.
It's an all-time high for that home.
You took it from me.
Oh, sorry. I thought you.
Oh, that's all good. 60.8% for apartments.
Yeah. Yeah.
Again, that's the highest since August of 2017. And all of this happened in December.
I think that's really worth extrapolating a bit on, because like Ryan mentioned, you typically see an elevated sales to active listings ratio in the active spring market in March, where the previous two records are from. Seeing it this high in December is new territory. And of course, what this means is you're seeing the demand and the pressure that's going to carry over into where we are today, into early January.
Yeah. And I think the reason why we're seeing those elevated levels is because the government has come out already and said that in 2022, we're going to raise the rates. I don't know by how much or by how often, but they're coming. And this is likely a result of that. People going, oh shit, I better buy now, or I better get into a house now before I'm paying twice the amount on my interest rate that I could get now, because that's going to happen.
That's right. Okay, here we are. We're going to talk price now. So not too much of a surprise. We hit a new all-time high last month. $1,230,200 is the average home price in GVRD right now. This is up 17.3% compared to last December, and it's up another $19,000 just last month, about 1.5%. That's the HPI. So let's look at the other two metrics. Median also up $11,000 last month to $910,000 is your median. Second highest on record, only behind April of this year of 2021, where it was about 11K higher. Mm-hmm. What about average? Well, also a new all-time high. Average home price, $1.24 million. That's up about $1,000 from last month, the previous all-time high. And I want to reference early October this year or last year now. We put out a video that talked about how prices were going to continue to rise every month until the end of 2021. And a few people didn't believe us. A 3-month trajectory is fairly somewhat plausible in what we can predict. And again, all the metrics then, every single metric pointed to rising prices. And Vancouver real estate doesn't change quickly. The trajectory is quite predictable in most senses. So, since that video, prices are up $44,000. And it's not like we have a crystal ball, but we know how to read data. And so it was quite predictable. And that's why I think it's quite safe to say that the environment we were in October is even been more accentuated today. So that means prices are going to continue to go up for the foreseeable future, if the foreseeable future is only 3 months.
Mm-hmm. I agree. I think looking beyond that, I mean, people ask me all the time, how is 2022 going to do? And there's so many different variables that can take place throughout the course of a year. But generally speaking, real estate moves at a slower pace, a more predictable pace than, say, the NASDAQ or anything like that, right? So trying to predict where things are going is a bit more of a function of macroeconomics, not the microeconomics. I mean, the microeconomics will tell you a little bit about each individual city, but really we also, we look at both, right? So we look at the cities that we typically work in, plus we look at the macro picture, and we look at jobs, we look at finance, we look at interest rates, we look at all the different metrics to come up with our narrative, right? And our narrative is simply what is taking place. And I think, to Dan's point, the reason we came out and told you guys that, prices were going to rise from October for this foreseeable future was because we wanted to save you that $44,000. That was the whole point. We knew that if you got in early, you could save that money, right? So I hope you did that.
Yeah, it's more common for housing to slow down in the winter months. And we just saw that wasn't happening last year and just advised accordingly.
Yeah. And again, I think lastly, the only thing I'll touch on price, why I think we're seeing these prices at this time is because we knew interest rate hikes were coming in early Q2 of 2022. And you take your typical 3-month rate hold and you back that up to where we were 4 months. We knew that banks had started to raise rates. So we knew that this fear of missing out was coming. And it's pretty obvious in Vancouver when the fear of missing out is there. Okay. Let's talk about some notable prices that took place. Detached homes and townhome benchmark prices increased a whopping 22% last year. That's big. Apartments, by comparison, increased by 12.8%, call it 13% in the same time frame. Maple Ridge saw the largest increase in benchmark pricing, 34.7%, call it 35%, followed by Pitt Meadows right around the corner at 29.8%, and Whistler, holy cow, at 27.8%. And the reason that is so big is because Whistler prices compared to Pitt Meadows and Maple Ridge, to see 28% gain in Whistler, holy cow, that's big. Anyhow, Pitt Meadows saw the largest benchmark price increase at 42.2%. Holy cow. Detached homes saw 38.5, townhomes saw 35.2, and that was in Maple Ridge. So let's break it down. So single family homes, right? Let's talk about specific asset classes. So in the month of December, 794 homes sold. That's a 22.6% decrease from December 2020, which we kind of touched on. And you have a very high price of 1.910, a 22% increase from December 2020. That's a massive change. This was a 2.1% increase from the month before. Dan, you want to touch on apartments?
Yeah, sure. But just real quickly here, I'm thinking about this tax still. I can't get it out of my head. And you got to think they're targeting this $1 million average, right? So let's be honest. The national average right now, I believe, is somewhere around $730,000. So the tax that's been proposed is really a tax on British Columbia and a tax on Ontario.
Mm-hmm.
And you got to think if the average home right now in Vancouver is 1.9, going up at 2% per month. I mean, we're a few months away from that being 2 million, which is where the high end of their tax goes. And also nationally, we saw homes go up an average of $160,000 last year. We're not going to see that rate this year, but it's going to take 3 to 4 years for the average home in Canada to tip $1 million. Believe me, that taxation, should it be implemented, it won't scale up. It will stay hard and fast at that $1 million until everybody's paying it. Just like what happened with PTT, even though they're increasing that.
Yeah,
Anyway,
I totally agree, because when you look at the fact that the average cost of an apartment is $761,000, and I remember like 3 years ago we were talking like $500,000. So we're talking about a $250,000 increase in maybe the last 5 years, right? $250,000 increase from 5 years from now, definitely possible. And so we're talking every apartment, every average apartment, every average townhouse, every average home in BC is going to get taxed. And yet that's going to be a federal tax. Right. Okay. Let's keep going.
Yeah. So let's touch on what happened with condos here in GVRD last month. About 1,460 of them sold, a slight decrease in sales volume from 2020, but benchmark price up 12.8% from last year. So condos really started to see an accentuation in price rate appreciation near the tail end of the year, because they lagged for most of the first half of 2021 here. But they've their prices increasing pretty rapidly now. Average condo about $762,000 today, and that's up a full 1.2% from just last month.
Guys, I mean, we kind of shrugging our shoulders at 1.2% per month. That's a staggeringly high number, right? Like these things should be going up at 0.3 to 0.6% a month. To give you some perspective, right? We're kind of rising at about 4 times probably what a sustainable number would be. Anyhow, townhomes, we sold 430 of them, 27.5% decrease compared to December 2020. However, the average price now cracked $1 million, 1 million, basically $1,005,000. This represents a 22% increase from December 2020 and a 1.5% increase over last month.
Welcome to the 2 comma club, townhomes.
If I may, a 1.5% increase is 15 grand on a townhome now. So you apply that. So apply that every month to the year. It's not a sustainable number.
It is not. Okay. So a couple other metrics to share with you real quick here. Days on market still pinned to the bottom at 11 days on average. That's 3 months in a row now that it's been there. Fun one to look at as well is the price per foot, average price per foot we were paying for housing right now. It just hit $803 a foot on average. That's up $13 a foot. It is an all-time high, of course. Interestingly, the per foot rate has hit a new all-time high every month since February of 2021. Every month, higher. I mean, it makes sense because home prices have done the same, but an interesting metric to compare it to. And then lastly here, percent of list price, like sale price to list price. Still, bidding wars are rampant. Most homes are going over asking, so much so that the average sale price is 101.6% of the list price on average. But important to note, that is increasing. That went up 0.7% compared to last month. So the amount of sale price over list price is getting higher than it was last month.
Yeah. So you just by, that understanding, you could probably see that prices are likely going to continue to increase, right?
Every single metric points that way.
If we are looking at a percentage of your list price and the percentage of your sale price, and it's averaging 1.6% over what you're listing it at, and the prices are continuing to rise, right? And that's just one data point. So, and to this point, in December, everything that we were involved in was in multiples right up until the 22nd of December, right? At which point we got sick and had to shut it down.
So looking forward, what do we predict? I mean, again, every metric is pinned to the top. Prices are going to continue to go up for at least the next 3 months here in this environment. Money still, the lowest it's been as far as being, the interest rates are basically the lowest they've been. Access to credit, easy. People can still borrow at incredibly low rates. Interest rates haven't moved, right? They're still at the bottom as well. So here we are in the highest inflationary environment we've been in, I think it was 25, 30 years. And yet they're saying, yeah, it's fine. We're going to leave rates where they are.
Yeah, I think for now, I think that'll change in the year. I think 2022 is going to be a bit of a different year in that respect. But generally speaking, still going to go up. Generally speaking, still tight inventory. Generally speaking, not much is going to change, but there will be change. I suspect, much like we came out with our predictions, by the way, if you haven't listened to that predictions video, go and check it out. We just released it last week. We're looking at probably 50 to 60% of what we saw in 2021 happen again in 2022. But so much of that is going to depend on how the coronavirus continues to evolve, how we decide to evolve alongside it. And then on top of that, how quickly and by how much are interest rates going to change the game? And those are the big factors because, Dan will tell you, just like I will, a quick turn on the interest rate knob and things can change quick.
Something else the CMHC didn't advise to do.
Because they can't pay back their own loans if they do that.
Right? Like
they back themselves into a corner and tax people out of it.
It is literally the easiest way to slow housing appreciation rates is increase the interest rates. They didn't even touch on it. Maybe that's not what that report was about, but.
Well, yeah, or just build more.
Yeah.
One of the
All
two.
Right. That is our episode this week. Thanks as always for watching and listening. Subscribe if you're enjoying these, and we look forward to seeing you next week.